the firm comes with all the accreditations that you would expect from a significant fund manager in Australia, with over 80 staff. We hold 7 licenses, both in Australia and in Hong Kong, and are a member of important financial bodies such as the Financial Services Council and the Australian Investment Council. As you can see on the middle of the slide, many of our funds have been recognised for their strong performance by independent bodies such as the Institute of Managed Accounts in Australia. And we're the only manager who provides complying funds for the 188 program that also manages a listed fund. Last year, we listed our REIT, the RAM Essential Service Property Fund, on the ASX, and you can see us celebrating there on the 20th of October when I got to ring the bell. So you can combine all of those investments I've talked about in different ways to adjust the risk and return. Here you can see 3 different combinations, which are all gradually conservative, moderate, and then more aggressive. So you can see if you take the most conservative choice of all those investments I've talked about and combine them, you'll get the portfolio on the far left, which means 80% of your money is invested in lower risk investments, 20% is in VC private equity, but even that, much of that can be in cash and reduced risk, as I've just explained. And there are 3 parties involved in looking after your money. RAM is the asset manager, National Australia Bank is the custodian, that's where your cash and bonds and equities sit, and equity trustees are what's called in Australia the responsible entity. Having an independent trustee is very important because they're the people who are legally responsible for the funds, the money going in, the money going out. And equity trustees are the largest and one of the oldest in Australia. They're listed on the ASX and were founded in 1888.
Well, the first thing to say is that not all corporate bonds are the same, so some are more risky than others. So we would invest in lower risk corporate bonds. That's what we would do. I'm struggling to think of a corporate bond that's investment grade that's gone bust in the last little while, but certainly you've got the wrong fund manager if you're investing in corporate bonds that have gone bust in the last decade in Australia. And then with the second part of the question, if your investment goes down, from a visa perspective anyway, that's okay. It's not good, but from a visa perspective, it's okay. It's the fact that you put $2.5 or $5 million in, and the government can see that you maintain that investment for 4 years.
Sure. So we have a subsidiary, a fully owned subsidiary, which is a non-bank lender, which does about $220 million of mortgages a month. And one of the first products we had was mortgages focused on non-resident borrowers. So we will take into account income from non-Australian sources. The maximum loan size is $2 million. The maximum loan to value is 80%, and interest rates are around about 5.5%, depending on the mortgage specifically. We have many clients from many different countries. I have to say the Vietnamese clients are my favorite. I come here 3 or 4 times a year. We have helped many Vietnamese clients move through this process, and we would love to help more.